Welcome back to this already the final segment of today's Price of Business. I'm your host, Kevin Price, talking to you about you and your business. Going to get straight to Charles Alvarez. He's a regular guest, regular feature here on the Price of Business, a regular contributor. Every week he comes in with different content, ideas, and guests, and today is no exception. It's with a company called Cornerstone Business Academy, cornerstonebusinessacademy.com. I consider him a thought leader when it comes to the sales and marketing consulting arena, and really glad, as always, to have you on. I've seen your work firsthand and always delighted to expose my audience to your great work, sir.
Thank you for having me. It's a pleasure. Thank you for the information.
You bet. And your guest today.
I'm very, very excited to have the CEO of Kelly Insurance Agency with you. His name is Dario, and forgive me for your last name. It's still, I guess, too early here in Texas. But Campolattaro. Thank you very much, Dario. I really appreciate it. So kind of tell us a little bit about Kelly Insurance Agency and what y'all do.
Sure. Well, I appreciate both of you having me on today. Kelly Insurance is a bank-owned, single-source insurance solution. So we're really a benefits broker working with small to mid-sized companies in the D.C. metro market. A thing that makes us a little bit unique, that we have a specialty focus on government contracting and technology, really helping clients deliver a solution on employee benefits, welfare, and overall comprehensive benefit package to their employees.
Yeah, very good. How old is your company?
Our business is 45 years old, based in the D.C. metro market in Leesburg, Virginia, right outside of D.C.
Yeah, very good. And by the way, the website, the best website for people to come check it out, kellyinsurance.com. Go ahead, Charles.
So, Dario, tell us kind of what are some of the challenges that your small and mid-sized companies are facing when it comes to the benefits that you offer them, and how is your company uniquely positioned to take care of them?
Well, I think that's a great question. Some of the challenges that are facing employers today are really not that unique. They're the continued rising cost of insurance premiums. That's been the problem since I've been in the business for over 20 years. However, there's a new challenge that employers are facing, and that's really healthcare reform, and everybody's probably very familiar with that if they pay attention to the news or pick up a newspaper. And really what we try to do is guide our clients through that process, the maze of healthcare reform. Trying to deal with staying compliant. There's a lot of compliance requirements. Trying to stay competitive. Employers are still challenging with the issues of the economy and trying to build their businesses. So we help them in trying to position their benefits and staying competitive for attracting talent, keeping new talent, and really growing their business. And, you know, the healthcare reform is an issue that's going to be with us for a long, long time. It has very, very many different facets that continue to roll out over periods of time over the next few years, and employers are really struggling to implement these different milestones, and we guide them through that process.
You mentioned that there's some things that are going on for business owners that are not unique, but there also are some things that are clearly unique. Talk a little bit about that, and that are really the result of the last couple of years.
Yeah, well, I think certainly the biggest challenge outside of healthcare reform, and healthcare reform, I could spend an afternoon talking about that subject by itself. But certainly the downturn in the economy over the past few years have really created challenges for employers in being competitive and keeping employees, attracting employees, being able to grow their business. That's certainly one piece of it. And then certainly in the D.C. metro market, the government ebbs and flows with what they're doing as far as our involvement overseas or global impact in business, and that affects many of our clients. And again, we're trying to help them through this process in staying competitive and being able to grow their business, because insurance premiums in a business environment continue to be one of the biggest expenses a business deals with. So we're seeing a lot of employers now spending more time in trying to address those premiums.
So, Dario, kind of tell us, I mean, I know I know just enough about the insurance industry to be dangerous. Mm-hmm. Policy premiums are about the same. There's not a whole lot of differences between carriers besides, maybe the servicing part. And, of course, like I said, I know just enough about it to be dangerous, but of course you can run circles around me 3 times or 10 times per second. So what are some of the biggest mistakes that you would say small and mid-sized businesses make when it comes to their benefits, and how do you address those? In other words, why should I go with y'all?
Right, right. Well, I think that's a very good question. I think one of the biggest mistakes an employer does is sets it and forgets it. They work with an insurance consultant or broker who maybe works hard for them around renewal time. Insurance renews generally on an annual contract, and that's when the broker may evaluate their current renewal and make some recommendations. What we try to do for our clients now is really work for them 12 months of the year and kind of always evaluating what the best practices are in the marketplace right now and how to keep their premiums cost competitive, and really looking at a 12, 24, and 36-month strategy. To give you an example, we have a client recently who won a large government contract, and they earned a 600-employee contract. This is a Service Contract Act, which is called SCA. It's very common in the government contractor space. We were able to come up with a solution before they put the contract bid in that helped them have a more competitive price point, and therefore they were able to win that contract. And furthermore, we were able to implement that change within 30 days of winning that award. So for them, it made a huge impact. I think it was a $110 million contract that they won. And I can't take full credit on it, but we certainly played a part in it.
Yeah, that's interesting. By the way, what's the size range of the companies that you typically work with? What's your sweet spot?
Yeah, I think that's a great question. Also, I would say our sweet spot is really for employers that are mid-sized, 50 to 500 employees. We have some clients that are larger than that. We certainly have some that are smaller than that. But I'd say that's our sweet spot. We compete, Kevin, a lot of times with some of the larger organizations, large consulting shops. And that's really not the space we plan on playing in. So we're not looking to be a national presence and working with 10,000 employee groups. So our sweet spot's more the mid-sized market.
Yeah, very good. Go ahead there, Charles.
So, Dario, when it comes to it sounds to me like your unique competitive advantage is the fact that y'all are more proactive than your competitors, because you're actually, like you said, you're working, each month on helping solve their benefits issues. So, kind of tell us a bit about what's some of the hot spots that you're looking at that a lot of businesses are doing wrong when it comes to the healthcare? Because you're right, if you're trying to scramble there at the end, and your insurance agent is trying to get you get you a deal for the next 12 months, they're not going to have time to shop it around and be proactive about it. So, what are some of the costs that translates into for the employer by not having a company like yours that is being proactive for them?
Well, I think it affects their business in a couple different ways, and I think maybe explaining it a little bit differently, that we set off with a very proactive, engaged relationship. You used the word proactive, and I agree with you, and that's part of our relationship with the client. And we try to understand the business's goals over the next few years. What direction are they going? Are they growing? Are they shrinking? Are they going to be adding employees? Are they going to be reducing their workforce? And then we develop a strategy on how benefits fit into those goals. And we continue to stay on top of that strategy throughout the year. So regardless of what changes because of healthcare reform or premiums or carrier changes, we always have our plan that we go back to and that we can adjust as we go through the process. A lot of times an employer will, again, like you mentioned, at the 11th hour, be dealing with a large rate increase, and they're going through, just a fire drill just to get through that process. Our objective is to keep it front of mind and stay working for them throughout the year. That way, they don't have to be spending so much time on that. They can run their business.
Yeah. Dario can be found over at kellyinsurance.com, kellyinsurance.com. Charles Alvarez, you can find him over at cornerstonebusinessacademy.com. Wrap it up for us, Charles.
So, look, it's a big deal these days, health insurance. I mean, with the Obamacare and with the Healthcare Reform Act, it really, really pays in significant dividends to have a company such as Dario's at Kelly Insurance to take a proactive versus reactive approach. So I highly recommend that you go to his website and check him out.
Thank you, Charles. Thank you, Kevin.
All right. When we come back tomorrow, much more for you. I had a great program with you today. I hope you have a great rest of your day and you spend it right here on this station.